Hello everyone, welcome to this educational presentation where today I want to talk to you about a strategy that I've actually been trading for over 44 years. If you can believe it, I've been trading for that long. But I'd like to start out by something that my mentors taught me, something I learned out when I began my career on the floor of the Pacific Stock Exchange. This is exactly what I learned because contrary to popular opinion, when I first started trading, I struggled tremendously. I know a lot of people don't think that. They think that, well, since you're teaching and have your own website and have your own webinars, you must be making money all the time. When I first started trading, I struggled tremendously, just like most people struggle. In fact, probably like many of you are struggling today. But I was lucky enough to have some mentors who turned my trading around. These were trading individuals on the floor of the Pacific Stock Exchange. And here's one of the first things they taught me. They said, Steve, the market, not some guy on TV, not some guy in a chat room, not someone who's supposed to be a trading guru, but the market is always giving you a clue as to which direction it wants to go. And if I may add, this clue is extremely simple. These clues that it gives us are extremely simple. Only trouble is we've always been taught to listen to something else, right? Got to listen to the earnings. I've got to see what's going on in the Middle East. Got to see what's going on in the current administration. Have to listen to someone who's on TV, right? We're always taking our cue from those outside sources, but we never focus on the simplest of things, and that's the chart right in front of you. Now, for example, here's a current chart in CCS going back to about almost a year, and as you can see, in hindsight, it's been going pretty much straight up. Now, here's what most traders say. They say, well, Steve, yeah, this is great, but I would have liked to have known a year ago that this was going to be at least going in an upward direction. Well, with one of the techniques I'm going to be sharing with you today, you actually would have known right here that this stock wanted to go higher. And then with a second technique, which is part of the strategy I'm going to be sharing with you today, it actually would have generated all these buy signals. And these signals are generated from the strategy that I've been trading for over 44 years. The best thing about all of this is that it's one click away on our platform. Everything I'm going to be sharing with you today has been generated and displayed from the PTS Primo Charting Platform, the educational platform I developed and designed with Pro Trader Strategies that was purposely to teach traders how to trade. So welcome once again. My name is Stephen Primo. I'm the president and founder of Specialist Trading. I teamed up with Pro Trader Strategies about a decade ago with one purpose in mind, and that was simply to educate traders around the world. And I'm happy to say that we have students in over 115 countries and in every state in the United States. Now, you'll see that attention to detail in today's presentation because I really want to educate you so that you can elevate your trading. I've often said there are more profits to go around that are needed. There's an infinite source of profits on a daily basis. The only trouble is most traders aren't able to capture them, right? Have a very difficult time. I'm going to explain to you some very simple things today that my mentors taught me decades ago that still apply whatever market, whatever time frame, and that I currently use. I was using them this morning to trade the E-mini futures. I've had a really nice day trading to the downside as well as the upside using these same techniques. All right, now, once again, I've been trading for 44 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, but I was a specialist for 9 of those years. Specialist is just someone that makes markets that if you wanted to buy or sell a stock, you had to go up to the trader who specialized in making markets. So I did that during the crash of 87 and the bull market that followed. So trust me, anything that's out there right now that someone is currently trading or some method or some technique I've seen and traded most likely before, any environment you can think of, straight up, straight down markets. After all, I traded through the crash of 1987 when a down day, one day was comparable to down about 6,000 points in one day. So I've been through those experiences, so I know what works in terms of consistency and I know what doesn't. So this is our goal, to try and make each and every one of you a consistent trader, because trust me, there's more than enough to go around for everyone. Now, before we begin, as always, we are required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 2 rules along with the strategy I'm going to be sharing with you today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that since we are an educational company, all examples are strictly for educational purposes only. Now, excuse me, a lot of traders say, well, Steve, is there any way to get more education on a daily basis? Sure. Follow us on Twitter. There's our handle right there. I post different information on a daily basis. Sometimes I post little bits of financial wisdom to help you along the way. Other times I'll post signals that our strategies have generated, and I go into detail explaining how and why and when they were generated, why the signals were. So lots of great free education on a daily basis. Feel free to follow us on Twitter. Now remember, we are first and foremost an educational company. So what does this mean? Well, as an educator, as a mentor, a good mentor does not trade for you. A good mentor teaches you how to trade so that ultimately you can make your own decisions. Therefore, if you've come here today thinking I'm going to tell you what I think the market's going to do, is it bottoming out today, or is it going to go down much lower, or is it going straight up? Or if I'm going to tell you what stocks to sell or which ones to buy, you've really come to the wrong place. I'm not going to tell you what I think of Bitcoin or what I think of the perfect time frame, because that would be doing you a disservice. The entire industry is based on so-called educators doing that. They tell you what to buy or what to sell, and then you just blindly follow along. In fact, I did that when I first started, and it didn't work 44 years ago, so it's not about to start working now. So that's really a disservice. The only way I have found and met consistent traders throughout the years are the ones that make their own trading decisions. That's the common denominator out of all these traders. Excuse me, and I don't just mean traders that had a good year. I mean traders that have been trading 20, 30, 40 years. They all make their own decisions. They don't go to chat rooms. They don't go to trading rooms. They don't worry about earnings or economic news. They don't listen to someone on TV or read blogs. They simply follow their plan. That's the secret to longevity, making your own trading decisions. So the good news is that's what specialist trading provides. We fill that gap. If you feel you haven't enough education or you don't have enough experience, we will show you the things that have worked over time. After 44 years, I know what works in terms of consistency and I know what doesn't. So remember, our goal as an educator is not to trade for you, but to teach you how to trade with the specialist edge. The same edge that has sustained me now for 44 years. Hopefully it will do the same for you. So since this is a class today, remember once again, ask me as many questions as you'd like, but I'm a little bit different from other webinars you may have attended. I like to take the questions at the end of class. So oftentimes if you wait for the next slide, your question will be answered. So if you have a question, just kindly write it down or remember it, and then ask me at the end. I'll reserve the last 10 or 15 minutes for any questions, okay? The only question I answer right now is this, and that is this being recorded? Yes, it is. In fact, each and every one of you will be sent a link to this recording at the end of the presentation. So if you want to watch it over again, you'll have it at your own leisure to watch it as often as you like. All right, with that stated, let's begin today's educational presentation. Now, I'm going to go right into it. Let's go into the rules that make this strategy. Now, once again, I can only share with you the first two rules. The good news is there's only 4 rules in this strategy, but you're getting half of them, and they are really the gist of this. The other main rules are just, I couldn't give that away, wouldn't be fair, but you're going to be able to see how valuable these rules are, and you can actually apply these rules to your current strategy. And I really strongly feel that they will increase your odds for success that much more. But as we said, the beauty of the things that my mentors taught me and the foundation for longevity and consistency is simplicity. The simpler things are, the more consistency they have. Most of us think it's the opposite. The more complicated a strategy or a technique or a method is, the more valid it will be, right? But it's actually the opposite. If there's one thing I've learned in 44 years, the great truth is it's the simple thing that work, not the more complicated ones. All right, so here's rule number 1. If price is above the 50-period simple moving average, well, then the overall trend is up, okay? It's that simple. And conversely, if price is below the 50-period simple moving average, obviously the overall trend is down. So why is this so important? Well, because we're never going to trade out of sync with the overall trend. We're only going to be in sync with the overall trend. So if I get a sell signal, but it's below the 50, we suggest to traders don't take it. Why? Because over time, you most likely won't have much consistency. Sure, you'll get a good winner here and there, and you'll say, hey, why would I listen to this Steve Primo guy? This stuff doesn't work. I just made a really good amount of money buying below the 50-period moving average. But if you do that over time, the way I did, most likely you won't have anything to show for it. All right, like the slot machines, I always say that this is just like the slot machines in Vegas. They're designed to give you a winner every once in a while so that they give you this false sense of security that you're doing well. But if you stay there long enough, which was what they want you to do, you'll ultimately give it all back. Trading below the 50-period moving average, trading buy signals, is just the same way. Or going short above the 50 is the same way. Every once in a while, you'll get a good winner. But if you do that long enough, you'll have nothing to show for it, and most likely give it all back, whatever you made. For example, let's look at this generic chart. Most traders would look at this and say, well, wow, we're going kind of down, back up, back down. There's no trend here, Steve. Actually, that's not the way we look at trend. What's the first thing we do? We apply the 50-period moving average, and then we ask ourselves, where is price in relation to that? Well, price is above. So actually, there is a trend. The overall trend is up, and we're only going to be a buyer. Now, conversely, we look at this generic chart here. Same thing. Someone would say, well, Steve, this is a range market. It's trendless. There's no, rhyme or reason. Every time it goes up, it goes right back down and right back up. So there's no trend here at all. No. If you apply the 50-period moving average, ask yourself, where is price in relation to that? It's below. So the overall trend is down. It's as simple as that. I told you this was going to be extremely simple. Now let's go on to rule number 2. We figured out how to determine the overall trend. Let's determine the short-term trend, okay? And it's extremely simple as well. When a bar closes in the top 25% of its range, the market is saying, not some guy in a chat room, not some guy on TV, the market is saying, I want to go higher. Conversely, when a bar closes in the bottom quarter of its range, it's saying, I want to go lower. It's that easy. This is for the short term. So if you're having difficulty with that concept, imagine this is a bar chart you're trading. This could be a 5-minute chart of the E-mini futures. It could be a monthly chart of Apple. It could be a 4-hour chart of Bitcoin. It makes no difference. But what you want to do is divide by 4 separate and equal parts. And if you close in that top 25%, well, the market wants to go higher on the short term. Now let's combine that with the overall trend, okay? So the overall trend is up. And now we want to combine that with the short term, and we have a bar that closed in the top 25% and see how it goes up. Now, right off the bat, someone's going to say, well, yeah, but look what happened. It went right back down again. Well, sure, but you don't know if these are monthly bars. It could be yearly bars. And on top of that, if you tried to short it, well, you're going against the overall trend, because what do we have here? Another bar that closed in its top 25%. And what happened to that one bar that sold off, okay? You see how the odds are in your favor if you're in sync with the overall and now the short-term trend. There's no reason now to look and complicate. Remember we said most traders think when you overcomplicate something, it's more valid? Well, most traders that become students of mine say, well, Steve, don't we look at the higher time frame to determine what the lower time frame is? So if I'm trading a daily bar, don't I want to look at the weekly bar to see what the overall trend is? Well, that's overcomplicating your trading. All you need to do is look at your one chart and look at these 2 rules, because the overall trend is decided by the 50-period moving average. And then the short-term trend is decided by these bars that close in the top or bottom 25%. That's it. You don't need to look at 2 or 3 charts at different time frames. I mean, I stopped looking at that some 40 years ago because it had no consistency for me. For some reason, traders think that's an extremely consistent method. I personally have found no consistency in using that at all. The only thing I've found is that it makes me miss a lot of good setups because I'm waiting for the 2 time frames to line up together. So if you feel you must and you can't, cut the umbilical cord, then go ahead and use that by looking at different time frames. But there's absolutely no teaching of that at specialist trading. Now let's look at the downside. All right, this bar closed lower, right? If you divide it by 4 separate but equal parts, well, you close in the bottom 25%. What is the bar telling you? Not some guy in a chat room or webinar. What's the chart telling you? It's saying it wants to go lower on the short term. So when we combine this with the overall trend, we see we have a bar here that closed in the bottom 25%. And look what happened. Once again, as my mentors taught me and how I opened up the presentation, the market is always giving you clues as to which direction it wants to go. Our only job is simply to listen and then jump on board. Trouble is, we're always taught to listen to something else. We're always taught to listen to some guy in a webinar or some earnings report or some economic news or something that's going on in the world. Listen to the market in front of you, and you'll have a much easier time getting consistent in your trading. Okay, now these two techniques make up the preliminary rules to a strategy that I've been trading for over 44 years. You've just gotten half the rules to this method, and this is strategy number 4. This is our most consistent strategy, and let me share with you some of the highlights of this. It's a pattern recognition strategy. You just saw 2 of the patterns that we look for. There's one more basic pattern that we have to include, as well as an entry point. But other than that, you have the rules, okay? It's designed for traders looking to catch momentum. And oftentimes, the beauty of strategy 4 is that it will generate signals when it looks as if there's no momentum there at all, kind of a sideways market or even a downward-looking market. It'll generate a buy signal. And you'll say to yourself, how can I have momentum to the upside when there's no momentum here at all? That's the beauty of this pattern. And it repeats itself over and over and over again in all markets and in all time frames. And it only uses one indicator. And you've already known what that is, the 50-period simple moving average. So that's how simple but powerful this tool is and this trading method is. Now, the advantages to trading strategy number 4 is, as I said, it's extremely consistent, extremely consistent. By consistent, we mean that not every trade is going to be a winner, but when you do have a loss every once in a while, it'll make it back. For example, this morning I was trading strategy number 4. My first trade was a winner. My next trade was a loser. My next 2 trades were winners. So you see how that consistency works in. It has the ability to recoup the losses and then make it back. Now, it also makes you a part of the process, okay? This is not a black box. This is not a systemized way of trading where you simply just follow the rules and it spits out buy and sell orders. You just follow them blindly. No, you know exactly why a signal was generated, what it was based off. It's designed also to be as simple as possible. So remember, if you're an intraday trader, the way I like to trade, or if you're a swing trader or an investor, you can use strategy number 4 on all markets, all time frames. So let's share with you some recent examples, both buying and selling, and show you how well you could have done that. By saying recent, I mean anywhere within the last month or 2 to the last couple of days, all right? Remember, everything you're seeing in the future right now is coming from being generated and displayed from the PTS Primo Charting Platform. Everything, every snapshot, every chart you're going to be seeing comes from the platform because we designed it to be extremely simple. And I just want to show you the process of what you'll go through if you become a student of strategy number 4 course. Okay, so let's look at this example here in GLD. That's the ETF for gold, okay? It's a stock. Now, looking at this in mid-April, just about a month ago, you would have said, okay, well, it's been going up, but you know, gold is kind of overbought. In fact, that chat room I go to says it's gone up too high, too quickly. So it actually is going to come back lower. I think I should sell this, right? So let's say you sell gold, sell the ETF, or maybe you buy puts, whatever you want to do. And for the first week, you're feeling pretty good. It really hasn't gone down that much, but it looks like it's in a downtrend. So you feel good about yourself. Maybe you even want to sell some more because you think it's really going to go down. But remember, the first thing you want to do is to apply the buy-sell line, the 50-period moving average. Just because someone or something says it's overbought or even oversold is not enough consistency to make you take the trade. Remember, we always are trained to take our cue from outside sources. What is the market telling us in this chart? Well, on our platform, it's as simple as this. You click on strategy number 4. That's the strategy. And in the drop-down menu, you click on indicator, which is the 50-period moving average. All right? Once you click that on, now you ask yourself, where has price been all along for the last week or 2? It's been above the 50. So there's no reason to short. Remember, you're supposed to be looking for buy setups only. Why? Because the overall trend is up. So therefore, you would have never sold here, even though you would have said, well, I made a little profit here. That's all right, because you have more consistency if you look for buy setups. Now, what do we have here? We are above the 50, and look what we have. We have 2 bars that close in the very top range. Let's check our work. This is the beauty of strategy number 4 as applied on the platform. You can check your work as you're learning to see if you've properly identified signals. Once again, we click strategy number 4. In the drop-down menu, this time we click signal arrows. And you're right. you've properly identified two valid signals. So you're learning how to become part of the process. For the very first time, you're learning how to make your own trading decisions. Now, you could decide for yourself and say, well, according to the risk parameters or according to where I'm supposed to buy, I don't want to take this trade. There's too much risk, or maybe there's not enough risk. It doesn't look like it'll go up enough. Or you could say for yourself, yeah, sure, I'll take the trade. Either way, how well did that sell go for you, right? Remember, the odds are in your favor if you only buy above the 50-period moving average. Here's another example here in DraftKings. Someone could say, this happened just a month ago. Someone could say, well, look at this. This is major support. And on top of that, we have a bullish engulfing pattern. So I'm really bullish on this. There's some good news about the gaming industry, and I go to that blog where that guy talks about the gaming stuff, and I really like this stock, so I'm going to buy it, okay? And then it goes up for about 3 days. You say to yourself, wow, I don't want to miss this. I'm going to jump in. So you jump in and buy because it's going to set to just make new highs. And then what happens, okay? What did you do wrong? Well, the first thing you didn't do was apply the 50-period moving average. Remember, before you do anything, click on strategy number 4, and then in the drop-down menu, click on indicator. And then you can find out whether you'll be a buyer or a seller. Once you did that, you ask yourself, where was price in relation to the 50-period moving average? Well, the entire time it's been below. So what happened to the support? Remember, don't base your decisions off of outside sources. What is the chart telling you? It's telling you that you shouldn't be a buyer, that you should actually be looking for selling opportunities. Okay, so if you properly studied how to identify this pattern, remember, one of the rules is you want to look for a bar that closes in the bottom 25%. You think you see one. So you check your work, click on signal arrows, and you were right. Instead of buying right here at the top, you actually could have sold and potentially made 19 points coming into this last week or so, okay? See, that's how simple trading can be. The reason why most traders fail is because they overcomplicate it. It's not because the strategy isn't working or the system isn't working. It's because you're overcomplicating things and listening to outside sources. Once you've learned how to listen to the market, it's so much simpler. Remember, it's not required to look at different time frames. It's not required to look at news events. I stopped looking at those things 4 decades ago. And if I'm still here, I'm living proof that you really don't need them to survive. If you want to, if you feel you must use those things, that's fine. We're not going to tell you you can't. But there's absolutely no need. In my opinion, it's a waste of time. All right, let's look at this example in UFS, okay? Now, this is going back to March. It looked as if we were in a downtrend. Most traders would say, well, you've got to sell this, right? But the entire time it was descending, we were above the 50. So this was actually a buying opportunity. And a signal was generated right here. And had you held it into the first week of May this month, you would have potentially captured 20 points, okay? Now, here's an example of a lot of traders like to look at when they're using technical analysis. This is a so-called classic double bottom where you make a bottom roughly about twice. And this is like a classic way for support. Traders love to look at this and they say, this is something you've got to buy, right? Look at it, it's making a classic double bottom. Well, remember, there are so many techniques and things that we've been taught that really have no consistency. What's the first thing we teach our students? Apply the 50-period moving average. I don't care if there's a double bottom. I don't care if there's a quadruple bottom. If you're below the 50, the odds are it's not going to work to the upside. The odds are you should be looking for sell signals. Now, if you learn how to identify a strategy number 4 sell signal, you'd have seen that there were not just 1 or 2, but actually 3 that you could have taken advantage of. And had you done that, instead of that double bottom, you could have gone short Disney and made potentially 17 points, okay? You see how the market was telling you it wanted to go lower? Here's an example in BABA, okay? Now, this is something that a lot of new students have trouble with, and here's a great technique to help you with this. Now, as we see, the stock is below the 50, but look what happens here. We have a really nice run-up, probably on some news announcement or something, and we closed above. On top of that, look what happened. It met all of the requirements for strategy number 4, so a buy signal was generated. Let's say you bought, or let's say you were thinking of buying, but look what happened in the next 2 days. Nothing really happened. We really didn't get stopped out. We really didn't go lower, but now all of a sudden we have a sell signal. So should I exit my long and go short, or should I stay long? Or a lot of students always ask me this, and I say, here's a rule of thumb. It doesn't, work 100% of the time. Nothing does. But this is a really good, helpful technique, especially for beginners. If you're having doubts or wondering whether you should take the signal, always look at the slope of the buy-sell line, or the 50-period moving average. All right. If you get a sell signal and the slope is going down in a nice orderly way, well, then the odds are in your favor that that may work out. But if you get a buy signal, as we have right here, and the slope of the 50-period moving average is headed lower, I wouldn't, or I'd suggest not taking that trade, because you're going against momentum. So therefore, we would not have taken this long trade because the slope is headed lower. But you could have taken the sell, and that would have been the right thing to do, because the stock fell 35 points coming into this last week. Okay? Let's look at PSA. Now, traders always love to play the victim game. They love to look back at charts like this and say, gosh, how come I couldn't see this coming? It's easy to see that we're in an uptrend throughout the month of April, but what about, March? How could I have known that it was going to go up? Well, remember, we don't have predictive tools. We never predict if something's going to go up or going to go down, or how high or how low. All we try to do is listen to the market. Had you added the 50-period moving average, well, you would have known well in advance that at least you should be looking at this from a buyer's perspective. And then if you knew that pattern to search for, there was not one, two, but a cluster of buy signals right here in March, that if you had held on to the beginning of May, you could have potentially made 45 points. So see, that's one of the difficult things about learning how to trade for yourself and making your own decisions. You get rid of this victim mentality that a lot of traders love to have. And they love to do it because they can always blame someone else for their losses. So if you go to a chat room, or you subscribe to some service, or buy some $10,000 system that automatically tells you what to buy or sell, if it fails the way many of them do, well, great, you can always blame them. It wasn't your fault. You were just an innocent bystander, right? And I think this is one of the main reasons why traders don't want to make their own decision, because once you make your own decision, there's no one else to blame. The beauty is, if you've made your decisions off sound fundamental techniques that have shown through the test of time that they work, well, then you're not blaming anyone. You'll be congratulating yourself and saying, I made that decision. I made that trade. So that's the beauty of becoming a part of the process. Here's an example on Twitter, okay? Here's the way most traders, myself included, I'm not trying to be arrogant or condescending, this is the way I used to trade. I would see a stock like this and say, well, wait a minute. The institutions are buying right here. So you got to buy, right? Because they've got the big bucks behind them and they're always right. Look at that support right there. So I would think that this is a great level to buy. Where in all factuality, it was a terrible level to buy. Because look what happened. Now, obviously, it went down off some announcement or some news. But had we had we applied the 50-period moving average, we would have known well in advance that it wanted to go lower. So we don't care about the announcement or the event, the news event or the earnings report. All we cared about, we're below the 50. The odds are in our favor that it will go lower before it goes higher. And if you knew how to identify strategy number 4 signal, guess what? There was one right here where you could have potentially made 17 points coming into the second week of May. All right, here's another example in DDS, all right? Someone looking at this, myself included, years ago would have said, this is a range market. That newsletter I subscribed to, because there was no chat rooms then, I used to subscribe to newsletters, and say, you don't want to trade in a range market. That's where you get whipsawed. So probably better to stay away from this, okay? Well, sure, we kind of are in a range, but we're in a range in an overall uptrend because the trend is still up, okay? Why? Because we're above the 50. Now, if you knew how to identify a strategy 4 signal, you would have seen that there were actually 2 buy signals here. And you could have potentially made 47 points in just about less than a week. Now, this just happened a couple of weeks ago. All right, that's how simple this is. Now, what about news announcements? Because I know a lot of traders are always saying, well, Steve, yeah, this all works great, but when the earnings come out or when there's some news announcement that goes against what you want, well, that's where you lose money, right? Well, I'm not going to sit here and tell you that this works 100% of the time in the face of news, but it's been my experience in the last 4 decades that the market tells you just about everything you need to know, even in advance of the news. For example, Yahoo Finance reported about Peloton May 5th. This was a couple of weeks ago. Peloton and the Feds agreed to treadmill recall. Why? Well, because it agreed to the recall because it's popular and pricey treadmill after at least one child was killed after becoming caught underneath the machine's belt. They also had a limited recall on the tread. This was also on 6 reports of the screen detaching and falling off. So this was bad news, okay? And this was reported on the 5th. And when that news came out right here on the chart, look what happened. The stock fell out of bed. But weeks before, it was much higher. Wouldn't it have been more advantageous to sell, or at least to get out of your long position up here? Well, sure. And guess what? You didn't have to be some fundamental analysis or go searching and looking through all the news events for Peloton. All you had to do was apply the 50-period moving average. Now, we never had one full close above. This closed right on it, but that was it. You need at least 2 to 4 or 5 closes above to generate an overall uptrend. All right, so even if this was just a little bit above, it was not enough because we went right back down again. And then look at the slope. The slope was strongly going to the downside even during this rally, telling us that the momentum is to the downside. So we knew well in advance, weeks before that news came out, that you should not be buying this, that you should be looking for sell signals. If you were a strategy number 4 student and knew how to identify a signal, you would have seen that there was one, not one, actually 2, right here at the top. And had you waited for that news to come out, you could have potentially made 36 points, okay? So once again, yet another example of why we preach that news is not required in order to become a consistent trader. I stopped looking at news over 4 decades ago. There's absolutely no reason I need to look at news. So if you don't want to and you're kind of afraid of it, well, just ask yourself, how well has it been working for you following news events or earnings or things like that? The market gave us simple reasons not to be a buyer of this, and actually a simple, a signal to go short. As we look at A, B, and B, okay, once again, 3 signals were generated to go short because we're below the 50-period moving average. This was in mid-April. Coming into last week, you could have potentially captured 55 points. Now, I know a lot of students say, well, Steve, yeah, that's if I sold and waited for the very bottom or bought and got out at the very top. But how do I know where to get out? Well, here's one of the best things about the platform and strategy number 4 course. Now, we give you upwards of 6 or 7 different exiting methods, but one of those methods is automatically generated on our platform. So as we look at this signal in Amazon last month, a buy signal was generated at the end of April, and in the next few weeks coming into May, our auto-generated exit signal flashed one right here. So you could have exited right here and in just about less than 2 weeks had a profit of 175 points. And look how beautiful these auto exits are, because right after you would have exited, look what happened. They're almost uncanny often many times because they pick these perfect points based off of a proprietary technique that we teach you what it's based on. The beauty of it is, even though you know the rules, it's one click away on our platform. Here's some more examples in Roku, okay? We're below the 50-period moving average. We have a strong downward slope and 3 sell signals here. Stock fell 85 points coming into the first week of May. Now, let me just share with you some different time frames and different markets, because I know not everyone trades stocks. There are some other markets that traders like to trade, myself included. I like to trade the E-mini futures. Here's something that I took this morning, okay? This was coming in from yesterday on a 30-minute chart, coming into this morning, all right? We went on a 30-minute chart below the 50-period moving average yesterday at roughly around 6 to 8 a.m. Pacific Standard Time. So at that time, on a 30-minute time frame, you knew that the market was telling you, I want to go lower. It's as simple as that. There was no reason you had to look at, oh, well, what's going on around the world, or what's going on with interest rates. There's no reason to. The market was telling you, the very source of what you're trading is telling you, I want to go lower. And now, as you notice here, 2 signals were generated midday yesterday to go short. And had you held on coming into this morning, potentially you could have captured upwards of 70 points. That's roughly $3,500 per contract. Not a bad little day, right? Just listening to the market. How about the euro dollar for currency pair traders? Here's a 4-hour chart of the euro dollar, okay? We're above the 50-period moving average, has a nice upward slope. The buy signal was generated coming into the 17th, which was coming into this Monday. And as you can see, 90 pips in roughly about 1 day. That's $900 per unit had you held out for the end of that day. And then lastly, Bitcoin. Here's another 4-hour chart of Bitcoin, okay? We all know that Bitcoin has been falling out of bed. People are saying, well, it's because of what someone said or it's because of what someone did. Who cares? Bitcoin was telling you well in advance by being below the 50-period moving average that it wants to go lower. So who cares what the reasons you may want to conjure up are? All it's telling us is it wants to go lower, so now we just look for that setup. And 2 of them right here, you could have potentially made 13,000 points coming into today, actually. So let's recap. Remember, in order to apply this really simple but powerful strategy, you need the 50-period simple moving average. And remember, we're not going to buy below the 50. We're never going to sell above. That's how we become consistent. And then we're going to see what the short-term trend is telling us by applying the top-bottom 25%. Now, if you apply these 2 things in sync, they make up 2 of the rules to my favorite strategy, one of the most consistent ones we have. That's strategy number 4. Now, in our course, we teach you all the rules. We teach you exactly what to look for, how to apply it, all the different exit points, all the different entry points, and stop placement. And guess what? Everything is 1 click away on the PTS Primo Charting Platform. We made it specifically simple for you to trade, okay? Now, strategy number 4 can be applied to virtually any market, any time frame, and any direction. I know the majority of slides I shared with you today were daily bars of stocks, but trust me, I traded intraday E-mini futures most of the time when I trade. And it works just as well there as it does in any market or time frame. As you've just seen, everything was designed to be simple for you. All of our entry points, all of our exits, and all of our stop placement can be 1 click away on the platform. So it makes it simple to trade on the platform. So ask yourself, do you think this strategy can help your trading going forward for the remainder of 2021? I'm almost certain that your answer is yes. So because of that, we have a great special offer for all of you today for attending. We're going to offer you strategy number 4. In fact, you'll get instant course access. All the detailed instruction, all the entries, all the exits, and all the stop placement, complete course rules that you can apply to any market and any time frame. But we're going to throw in an extra bonus as well. We're going to throw in 6 months of the PTS Primo Charting Platform absolutely free. This is a nearly $900 value, absolutely free. Now, the best thing about that is that you're not just getting strategy number 4 on the platform, but you're getting a host of other things that you won't find anywhere else. These are all tips, techniques, and methods that I've accumulated in my 44 years of trading that you'll have access to, and they're 1 click away. Like the enhanced buy-sell line features. We told you the 50-period moving average is what we call the buy-sell line, but we also have upwards of 4 different ways to view it and have it displayed. We developed a strength of trend tool. This is a great tool you can apply to any market or time frame that has the uncanny ability of showing you and giving you a good clue as to when a trend is about to run out of steam or if it has more momentum left in it. Auto-generated exit levels. I shared with you what those exit levels were and how they can just with 1 click show you where these levels are and you decide if you want to choose them to exit the trade. Over 90 of the most prominent technical indicators along with personalized tech support. But here's the best thing. If you've attended my webinars before, you know I have a pet peeve about scanners, all right? I've traded with just about any platform you can think of. And I have a pet peeve with their scanners because they're complicated. Trust me, I mean, I've gone to some platforms before, which will remain nameless, that it's taken me over an hour to figure out how to scan for a simple, technique. Let me show you how simple it is. We developed this to be extremely simple and also to take the least amount of time as possible. This is the signal scanner that you have also coming with your 6 months on the platform. So you can scan for strategy number 4 setups as well as other setups for other methods and techniques. On the drop-down menu in strategy number 4, instead of clicking signal arrow indicator, click on scanner. And this page will appear. Okay, this is our scanning page. All right. You see here in the upper left-hand corner, click on load symbols. Now we give you a list of symbols to trade with, anywhere from currency pairs, futures, different markets such as the DAX markets, such as European markets, Asian markets. We also have currency pairs. We have, crypto markets. We also have stocks and ETFs and futures. So whatever one you're interested in. Now let's just say we just pick this one, which I believe is the NASDAQ. All right. Once you click it on, which takes a matter of seconds, click on scan. That's how simple it is. And in less than a minute, you'll see a series of green or red horizontal bars. The green bars simply mean that there's a buy signal in the corresponding market. The red one's a sell signal. Now, let's say you had become a student of this, excuse me, a couple of weeks ago, and you decided to scan last week for some signals. You wanted to trade, you learned all the rules, you had paper traded for a while, and you said, you know what, I'm going to use this. I feel confident that I know how it works. I'm a part of the process. I know the money management. I know what I want to enter, where I want to exit. So you scan, and you see that a buy signal had been generated on the 13th in STX, okay? That's Seagate technology. Now, the 13th was just about 2 weeks ago. So you say to yourself, this looks pretty good. I think I'll buy this. Well, that would have been a great decision because the stock gained 20 points in 2 days. This is how simple it is. You could simply scan for it, find out which one feels the best, meets your trading persona, and then buy or sell whatever the signal is. The good news is that you know what it's based off of. This is not black box where you just simply buy or sell something. And the most important thing is you're making the decision. No one is telling you, well, these are the stocks you have to buy tonight, or this is what we think of the market, or this is the perfect time frame. It's your decision. That's how you become a consistent trader. Okay, so let's break it down. Strategy number 4, the complete course rules and the manual go for $6.95. That includes a scanner, and that includes all the things that are available on the platform, along with free real-time PTS Primo charts for 6 months. That's a nearly $900 value. Now, if you purchase these things separately, all right, had it been last week and you purchased these things separately, well, normally it would cost you close to $1,600. Well, we're going to discount that today because, once again, you're not going to pay anything for the PTS Primo Charting Platform. So you're only going to pay for strategy number 4, only $6.95. You're going to save close to $900. That's nearly 60%. Now, $6.95 is not a lot of money. I'm sure many of you have lost more than that this past month, okay? Maybe the last couple of days. But here's the good news. Pro Trader Strategies, my sister site, I developed the platform with them, and they're in charge of all the pricing. They can also take payment plans. So if you're having difficulty, they can still, for a small deposit, you can still be up and running, okay? Remember, you owe it to yourself to take charge of your trading, to take it to the next level. Invest in yourself for the first time. So many times students come to our courses and they say, well, gosh, I wish I had found out about you guys before. I've spent so much time and especially money, thousands and thousands of dollars looking for that holy grail. And then after I found you guys relatively inexpensive, I've become consistent. So take the plunge, owe it to yourself. Spend, less than $700. Trade a strategy that I personally trade on a daily basis. All right. Here's how to take advantage of this great deal. Contact Pro Trader Strategies. They're in charge of all the pricing and the discounts. They're also in charge of the tech support with the platform. They can set you up and running. In fact, they can do it as early as today. If you're excited about this, if you want to become a course member and a student of mine, you can get on the phone with them, call them directly at 310-598-6677. And just in a couple of minutes, you can be signed up and ready to go and make an appointment to have your platform set up for you. Most likely it would be today. You can be up and running by this afternoon. That's how simple it is, okay? Now, that link you see at the very bottom is the link that will take you to the information and sign-up page if you'd like to do that online. Now, that's not a live link, but they just posted a live link in the chat box. So if you want to go to the chat box and go to webinar column, you can click that on, and you can see that it will be there, and you can click on that and go to the page where all the info is, okay? Now, I promised you I would reserve the last 10, 15 minutes for any questions. So if you have them, go to the question and answer box on the go to webinar column, type them in, and I'll answer them to the best of my ability. What if I want to use my platform? I trade currently with Thinkorswim. Well, here's the good news. You can still, with our platform, you can still, say you want to trade through Thinkorswim, or let's say through NinjaTrader, or through Metastock, or TradeStation. But what most traders do, myself included, is they still have the platform. You're still going to get 6 months of the platform. You can see where the signals are on our platform and then toggle over onto the platform where you enter your trades. It's that simple. I do this personally with, I look over at what I'm looking at on the PTS Primo Charting Platform. And if I get a signal or so, or if I see something to set up, then I enter the order and I toggle over onto the platform I use. So there's no reason to discard one and only have one. You can still use two. A lot of traders have two up there at the same time. It's very, very common, okay? Next question. Someone says, what do you mean by educational correspondence? Okay, this is a very common question I get when I do these webinars, because if you see on the promo offer, one of the very last lines, it says educational correspondence. What this means is that you get my personal email address and you can contact me whenever you'd like. And I mean whenever. It can be in the middle of the night. It can be also on the weekends. I'm not going to say I'm going to answer it in the middle of the night, but I get up very early. I'll answer them as soon as possible, and I answer emails over the weekend. The beauty of this is if you're having trouble understanding the process or understanding how to identify the pattern, you can always ask me and I'll look at it for you. I'll give you different tips and different ways to increase your progress. And you can show me charts, send me charts, or ask me to look at charts, and I'll show exactly what to identify. So it's like me sitting right there with you, except that I can't do that. We have students all around the world, so I couldn't fly to everyone's home. But the next best thing is you can email me and I'll answer your question as best as possible, okay? Okay, next question. You tend to take signals closer to the 50-period simple moving average. Is that a better trade to take? Well, that's one of the things we don't, it's one of the things we don't say that is a rule. It's just a suggestion, because a lot of traders in the beginning have trouble. They're seeing a ton of signals and they don't know which ones to take. So we say, listen, take the ones closest to the 50, because those ones have high probability. And if they don't work out, well, they're not going to be that big of a loss, in other words, because oftentimes price types likes to hug. So this is just a suggestion, but sometimes if price is closer to the 50, especially if it's an ascending 50 and you're long, you have more room to go up, because then it bounces from there. In fact, do the due diligence. Go and look at some charts and look and apply the 50-period moving average and look how many times price will get there, come down to there, stop, and then bounce back up, okay? So that's why we suggest that, so it'll help you with your paper trading and then with your trading in the beginning, okay? All good questions. Someone lastly is saying, when does this deal over? Well, I would assume this deal is probably good for the next 48 hours. After that, it'll go back up to close to 1600. And then, we are giving you a link to this recording. Everyone is going to be sent this, and you can watch this at your own leisure to help you make your decision. But don't, as I often say, don't wait too long, because let's say you wait a couple of weeks and you say to yourself, wow, I've been trading for 2 weeks since I went to that presentation and I've had nothing but losses. I think I'm going to take that offer that they talked about for $6.95. Well, unfortunately, 2 weeks from now, that may be gone. So if you're very serious about this and you want to become a student of mine, watch the video tonight, but then make your mind up, because they want to lock you into that good price. If you've been following me for a while, every Wednesday or Thursday, I give a free educational presentation, and I always am promoting or talking about something entirely different. Sometimes the price is $3,000. Sometimes it's only $295. Sometimes it's $600 or $700 or $1,200. So, we're always going to be talking about a different method, a different technique. So if this is one of our lower range products. So if you're interested at all, watch the video tonight, but make a decision in the next 48 hours, because I don't want you to have to pay $1,600, okay? If you're really serious about becoming a student of mine. Okay, if there are no further questions, I just want to say I hope you learned something. Once again, we are first and foremost an educational company, and so I like to present webinars that are different from other presenters. I go to webinars myself to see what people are saying or how they're teaching, and oftentimes what they'll do is they'll string you along and show you some fantastic method or technique and not give you any information on it, just show you the results, and then string you along and then say, well, in order to find out some of the rules or some of the process behind this, you have to spend $5,000. Well, I don't believe in that. I want to give you some information each and every webinar. Even if you decide not to become a student of mine, at least you have some education to take for with you and for yourself. So experiment with these two rules that I share with you, the 50-period moving average and the top bottom 25%. I think you'll see after experimenting with them, maybe this afternoon, that there really is a lot of validity behind this and a lot of consistency. And if it piques your interest, then become a student of mine, because these are two of the basic rules to strategy number 4, okay? Now, as we close out and take one last look at our disclaimer, I'd like to thank you all for taking the time out of your Wednesday to come hear me speak today. But most especially, I really look forward to all of you becoming students of mine in the strategy number 4 course. Thank you so much for listening. Have a great day and hope to see you in class. Bye-bye.